Hello everyone, welcome back to Let's Learn. So if you are new to this channel, please subscribe to the channel and click the bell icon to get the latest notification. So today's topic is all about debt market. Okay, so in this video, we will be discussing what is debt market, then about GSec securities, that is government securities, then bond market, then the main two terms, that is WDM Wholesale Debt Market and RDM, that is Retail Debt Market. Then we will be discussing about stripes and also the hindrances for the development of debt market in India. Okay, so these are the main topics we are going to discuss in this video. So let's start the video. So what is the debt market? Okay, the debt market is a market where debt instruments are traded, in simple words. So these are financial instruments which have fixed income securities and giving a fixed rate of interest to the investors. Okay, so these securities provide a regular interest payment at a fixed rate with principal repayment at the time of maturity. Okay, for example, we have a debt security of 100 rupees. Okay, then after the for a 3 months period, so after 3 months we'll be getting that 100 rupees back, and in between the 3 months we'll be getting an interest. Okay, suppose the debt instrument is for 4% interest, then we'll be getting the 4% of 100 rupees as interest in 3 months, and after the 3 months we'll be getting that 100 rupees. Okay, so that is how this debt market works. So the debt instruments will give a fixed return onto the investors and gives the principal amount at the time of maturity. Okay, so the issuer of these securities can be local bodies, municipalities, state, government, central government or corporate, etc. Okay, so major debt market securities are bond, government bonds, debentures, treasury bills, certificate of deposit, commercial papers, etc. So these are the main types of debt market securities. Okay, so now let's see the features of this debt market. Okay, first feature is that it is an efficient debt market, has a competitive market structure. Second, we can say it is a market for a long-term debt instrument. Okay, the debt instruments range from 1 year, 2 year. Okay, so it is a long-term debt instrument. Thirdly, we can say it offers a certainty of return from the investors. That is, we have a fixed rate of interest. Then the transaction costs are low. So these are the main features of a debt market. Okay, so now we can see the government security market, that is GSec market. Okay, these are the debt instruments given by the issued by the government, that can be state government or central government. Okay, so when government, we can basically say in a simple way, government wants to start a development project. Okay, and for doing that project the government will need fund. So from where the government will get fund? The government will issue the GSec bonds. Okay, so by issuing that, the government will raise fund for that project from the public. Okay, so for the fund raised, the government will be giving the investors a interest rate. Okay, and after the maturity of the bond rate, they will be giving the principal amount back. Okay, so we can say central and state government can issue these securities. The loans are being taken by central and state governments for various projects when these government needs fund, and these GSec securities are issued by RBI on behalf of state or central government. Okay, as we can say, the GSec securities are issued by government. It has full safety on investment. Okay, and it has a higher leverage, and there is no TDS on interest payments. Okay, that is no taxes charged on this interest payment. And but as the risk of GSec securities is very less, as it is backed by government, so the return also will be low. Okay, so mostly the people are old people or the pension fund people are the main investors of these GSec securities, because the people who are not interested to take much of a risk or a high risk invest in GSec securities, because GSec securities have a very low risk but also have a low interest rate. Okay, so here we can see the government will be raising funds from the public with the help of GSec securities for developmental projects. Okay, so that is all about government securities. The next one is bond market. So what is a bond market? The bond market broadly describes a marketplace where investors buy debt securities that are brought to the market by either governmental entities or corporations. Okay, the corporation can be public or private. So these are issued to meet the financial requirement of the government or companies. So bonds are issued and sold to public for fund. It is simply a debt instrument. Okay. So what are the types of bond that are sold in India? First one is corporate bond market, that is issued by the corporates. Second one is municipal bond market, which are issued by municipalities. Then there is government and agency bond issued by government. Then mortgage backed and collateral debt obligation bond market. So these are the main trending bonds that are bought and sold in India. Okay. So now let's see the main term, that is wholesale debt market. Okay, wholesale debt market WDM is a trading system also known as NEAT. Okay, that is National Exchange for Automated Trading. It is a fully on-screen based trading. Okay, it commenced its operation on 2001 of BSE. That is BSE, Bombay Stock Exchange, has a wholesale debt market which was or started operating in 2001, and NSE, that is National Stock Exchange, has a separate wholesale debt market segment. Okay, so this Bombay Stock Exchange and National Stock Exchange both have separate wholesale debt market system. Okay, so in wholesale debt market there are two markets. One is continuous market and second one is a negotiated market. So in continuous market, the buyers and sellers won't know each other. Okay, so they will make their bids and that their orders, and if the order matches, then the trade occurs, and if not, then the trade will not occur. So that is how it works in continuous market. But in negotiated market, it the trade occurs, or the discussion or negotiation occurs outside the stock exchange. Okay, outside the stock exchange, they decide everything, they fix the price and they fix the order, and then they inform the system in the stock exchange. Okay, so that is how continuous market and negotiated market work. Continuous market is where buyers and sellers do not know each other, they just place their order, and if the orders match, then the trade occurs. Okay, and in negotiated market, it first occurs outside the stock exchange, they both negotiate, they would fix their order and then inform the stock exchange. Okay, that is the two type of WDM market. Then here in WDM, the mostly the investors are banks, financial institution, RBI, insurance companies, then foreign institutional investors. These are the main participants of wholesale debt market. Okay, so I hope wholesale debt market is clear to you all. Now let's move on to the next topic, that is retail debt market. Okay, so retail debt market presents enormous opportunity for the Indian investor whose knowledge and participation till now has been restricted to equity market. Okay, so this retail debt market is giving investors a tremendous opportunity to explore this trading system. Okay, so this retail debt market has powered tremendous growth and transformation of the stock market. So who all are the participants that are involved in retail debt market? This involves individual investors, provident fund, then pension fund, etc. Okay, these are the main participants in retail debt market. Okay, so that's about retail debt market. Then the next topic is stripes. Okay, that is separate trading of registered interest and principal of securities. As its name is big, but the concept is very simple, but you have to listen very carefully to understand, because it sometimes get little bit confusing. Okay, so stripes, separate trading of registered interest and principal of securities, are debt securities that are created through the process of coupon striping. Okay, so here no interest payments are received by the stripe holders. The coupon are sold as separate investment. Okay, so to understand this better, if I have a 100 rupee bond, okay, I have a 100 rupee bond. The face value of the bond is 100 rupees. Okay, and it has a interest of 4%, and the maturity is for 3 months. Okay, so what I am doing is that I am stripping the bond into two parts. One is the interest part and other as a zero coupon bond. Okay, and I am selling the zero coupon bond at 80 rupees to some other person. Okay, suppose I am selling it to you. Okay, at 80 rupees I am selling it to you. Okay, after 3 months you can redeem that bond that you purchased from me at 80 rupees at 100 rupees. So the difference of a bought and sold, that is you bought that bond for 80 rupees and you're redeeming it for 100 rupees. So 20 rupees will be your profit. Okay, then what will be my profit? That I am selling the 100 rupee bond to you at a discounted value. Then what is my profit? The 4% interest for 3 months that will be received by me. Okay, that is, you will not get the 4% interest, you will only get that bond, and after 3 months when you redeem it you get the full value, and that is only your profit. Okay, and the interest, that will be, I will be getting the interest and that will be my profit. Okay, so I will explain this stripe once more. Okay, suppose I have a bond of 100 rupee and it is 4% interest rate. Okay, 4% interest rate, and the maturity period is for like 3 months, 3 months maturity. Okay, so what I am doing is that I am selling that 100 rupee bond to you at 80 rupees, that is discounted time. I am giving it at 80 rupees, but you won't receive the interest, you only receive the bond as a zero coupon bond. Okay, but after 3 months you can redeem this bond at 100 rupees, that is the face value. So your profit will be, you bought it at 80 rupees and you are redeeming at 100 rupees, so the difference 20 rupees will be your profit. Okay, but I am selling you the 100 rupee bond at 80 rupees to you. So what will be my profit? My profit is that I will be receiving this 4% interest for 3 months plus the 80 rupees I get from you. So that is my profit. So that is how this stripes work. I hope it's clear to you all. And if you have any doubt on this, please comment it down. I will be repeating it once more. Okay. So now let's see what are the hindrances that the debt market faces in its development. Okay, so first one is small investor and trade base. Okay, so the debt market has not been able to attract more investors like equity market or primary market. Okay, that is, the more investors are still participating in equity shares and not in debt market. Okay, so because of that, because of small investors, the debt market is not being able to develop. Okay, second one, we can say the trader base, mostly banks, financial institutions and government, only they are participating. Okay, so because of that also it faces a difficulty in development. Second, we can say absence of benchmark rate. There is no benchmark rate fixed by this debt market. So because of that, no new or innovative instruments are being coming or created in this debt market. So that is also a problem for, or a hindrance in development of debt market. Then we can say absence of market makers. Like in equity market, we have primary dealers and big corporations who are participating or investing. Or okay, so like that, all that are not happening in that market. Only a few participants are coming into this or are investing in this. So that is also a problem. Then we can say attention of policy makers. Okay, that is still now debt market has not been able to attract more of foreign institutional investors or GDRs. Okay, so because of that, the debt market is not being able to develop as of a equity share market. Okay, next we can say the participation of retail investors. So here it is that only a limited number of retail investors are participating in debt market, and the bonds, that corporate bonds they can buy, is also a limited. So because of this limit, it also faces as a hindrance in the development of debt market. Next one is higher cost. Okay, the main cause of higher cost in debt market is because of the stamp duty. Okay, that is, the stamp duty varies from state to state, or withholding tax, etc. So these are some of the problems. Because of this, the debt market transaction cost becomes higher. So because of this stamp duty cost, the debt market also cost higher. So the next hindrance is lack of a credit default swap market, that is CDS market. Okay, the absence of a well-developed CDS market is yet another constraint because these serious hedges would have enabled buyers of corporate bonds to avoid default of risk of issuers leaving from holding only interest rate risk. Okay. So a well-developed serious market is also a major requirement in case of a debt market for its development. So let's see what are the other hindrances. Next one is TDS policy. Here, the TDS policy for all bonds are not uniform to all investors. Okay, because of varying rates of in TDS, it also create more of confusion among the investors. So it also stands as a major hindrance in development of this debt market. Next one is bond financing. Here, I told you the major participant in this bond market or debt market is financial institutions such as banks, corporate, etc. So, the banks feel it is more easy to provide loan to the corporates than investing in their bond. Okay, so they are not much of interested in investing bond financing. So, because of that, also the development of debt market is not taking place. Then the other one is debenture trustees are not very effective. Okay, because of this also, uh, it creates hindrances in development of debt market. Then other one is absence of order matching platform. Okay, as I told you, in a continuous market, the buyers and sellers are not meeting. They just give orders, and if only if their order match, the trade takes place. Okay, so there is an absence of order matching platform. Because of that also, debt market is not developing. Then other hindrance is that the regulatory prudential norms. Okay, it is that there is a lot of norm, there is lot of limitation, there is lot of restriction and procedures in debt market. It also stands as a hindrance in development of the debt market. Then we can say the regulatory barrier. As I told you, there are a lot of limitation, lot of procedures, and all this a lot of regulation, lot of norms and regulation uh, will not help in effective development of this debt market. So these are the main hindrance that comes in the development of a debt market. So first one is small investor and trade base. Second one is absence of a benchmark rate. Third, we can say absence of market makers. Then attention of policy makers. Then less participation of retail investors. Higher transaction cost. Then lack of credit default swap market. Then varying TDS policy, less interest in bond financing, lack of liquidity, then debenture trustees are not very effective, then absence of order matching platform, regulatory prudential norms are very much restrictive, and lot of regulatory barriers. So these are the main hindrances for the development of a debt fund. Okay, so that's it. So today we discussed about what is a debt market, then we discussed bond market, government security market, then also we discussed wholesale debt market and retail debt market, and also saw the hindrances in development of debt market. And we also studied about stripes. Okay, so I hope it's clear to you all. If you have any doubt, please put it under the comment section. And there is also a Telegram channel to get the free PDF of these videos, so please join that also. So if you like the video, give it a big thumbs up and also share this channel to all commerce students you know. And if you have not subscribed, please subscribe and click the bell icon to get the latest notification as I am uploading a commerce video on a daily basis. Okay, and you also can comment down the topics which you are interested to watch in my channel. Okay, so for more commerce video, keep watching. Let's learn. Thank you.